Hello everybody, welcome to another video here on the channel. Today is going to be my Chart Annotations Review, episode 3 and possibly 4 if I get enough time. So yeah, if you guys are new, I do recommend starting with episode 1. I basically just review the price action. This is the specific week starting with Monday the 6th. Going through, today is going to be Wednesday of that week and Thursday if I get enough time. So starting off here, looking at daily open, you can see we traded above it here, but we also traded below it. So looking at the annotations, it kind of actually, it looks like we ended up sort of going a little under today. I mean, I guess we'll see. But honestly, I would not really have a bias with time and price because we traded above it and below it. Let's look at the previous sessions though, see what traded. So yeah, Asia and London were both mainly above. So I probably would be bleeding more bearish, but doesn't really give me much information here. You can also see we took out Asia high during the London session. We took out Asia low during the London session. We just took out this. So we may go up to take out this London high before getting our move lower. It's just a possibility. Doesn't mean it will happen. So first, going into this morning, it looks like we're a little bearish. We're having a downtrend. We have all these fair value gaps. We've tapped into this 5-minute, this 15-minute, sort of selling off a little bit here. This is about 7 a.m. And let's just see what happens here. So going into the morning, we sell off. You can also see an example of this macro working right here. We are in an uptrend, macro hits, this reverses the move, then we head lower. I didn't actually annotate anything over here, so that's a little more further into the day. But you can see we just took out this sell side, this protected low, and we're probably going to take out this protected low. So let's just see some more action form. So now we take out this protected low. So from right here, I'd be pretty bullish if we go into this macro, especially because we're in a downtrend just like this. Let's see what happens here. Okay, so right here, we enter the macro. We have an uptrend going into this macro. Even though this is a massive downtrend, we do have an uptrend going into this macro. So two things you could look at this. You could look at this as a market structure shift. Where's market structure shift at? Come on, there it is. Okay. And then this could be buying, and then you could see this. So this could be buys right here. You can also see though that we did create sort of a manipulation leg. I don't think this is a really manipulation leg though. I would not consider this as a manipulation, but let's see what happens here. I would not take this entry just because we have a downtrend here. So we may go higher, right? But we'll keep watching. So we end up selling off. This is where I would take a more probable entry. Market structure shift. We have a fair value gap right here. We also have another one right here. We tap into this fair value gap that's created. So you could put an entry right here. Target these lows if you wanted to. This would be a good trade. And then that's really it for this macro, right? This is the liquidity that we are wanting to target. You could also possibly target this discount of this entire massive range right here, right? About this entire massive range here is discount. So you can possibly have a TP there. So I'm going to real quick draw this out. So let's say you put a possible entry right here on this fair value gap. right? You can also see we have a sort of a liquidity gap right here, and we do tap into that on the inverse. You could put your stop at this candle's high, although this would be a little risky because we have fair value gaps above here. And then you could have first TP at this low, and then second TP at this 50%. So let's see what happens now. First TP hit, stop would be moved to break even. So macro ends. When the macro ends, you can take off your position here if you feel comfortable, or you could just hold it until TP hits. So right there, TP hits. So this would be a very, very great move, taking advantage of this macro, right? We have an uptrend going into this macro. We also have equal highs right here, which gets swept. Also tapping into this 1 minute for value gap that did get retested multiple times. And we sell off down to this 50%. So now let's see what happens. Going into this macro, we have a downtrend, so possible reversal if we break above a recent high. So here we didn't go above it because we didn't close above. Actually, this would not be a recent high. So still nothing here. So this macro is useless. There we go. We sell off even more. We have this 1 minute that's getting respected quite a lot. Now right here, this looks like accumulation. So I would expect before we make another move, which in this case I'd be looking to take a trade higher because we are in discount of this range and we just sold off a bunch. And now we're slowing down, holding this 1 minute. So I would expect to see a sweep of these lows as sort of like manipulation. Right, so liquidity sweep. So here I'd be just looking here. There's a small sweep. I'd look for displacement higher. So here's displacement higher. You could possibly take an entry in this 1 minute for value gap right here if it gets respected. But again, too, we could not, because this candle right here did not tap into another PD array. It's usually a lot more likely if we were to tap into this 1 minute. So that's why I would have this 1 minute drawn out. Macro hits, downtrend, we could see a reversal here. We also have another sweep of this low. So as you can see, macro reversed us. We take out this high and this high. Once again, respecting this fair value gap that's been getting hit a couple times. And right here, this is where I'd take a buy. So you have right, all these candles are pretty small. We have a little bit bigger up close candles, but notice these candles, these red candles, they're all small. Even these ones are kind of small, right? But look at this red candle, massive red candle. We tap into this 1 minute, respect it again here. This is where I'd want to take an entry, right? Because this is accumulation. Here's your manipulation down, which taps into this. Now I'd want to see for value gap created, which is right here. I want to see us tap back into it. We do right here. And then standard deviation, if we put on this manipulation leg, we could put your stop at the body of this candle, which can be a good risk to reward. This would be risking 10 points. And first target would be here, as to 2.5. We don't just quite tap it yet. So here we go, we tap it. You could take a TP off here. You could take a TP at this high, but also this 3.5 to 4 area. So let's see where we go here. We go higher, and we tap into this 3. I don't know why this TP is drawn out like that. Oh, it's because that's okay. This is out of this move down right here, this is the premium, so this could be another TP, which does align with 3.5 to 4. Alright, now we're in this macro. We have an uptrend. I do expect us to possibly reverse. It is a very strong uptrend though, so maybe not, but we also have all these PD arrays right here and this 1 hour, so we could go lower from this macro. So here's a low put in. I want to see us displace below this low. Here's another low put in. No displacement through any lows. And we just keep going higher with this macro. So just be watching price a little more now. Looks like I start doing my annotations a little later in the day. I don't know. I didn't do many annotations here. So again, we're still uptrending. Then we go into this macro. So this is the 1050 to 1110. This macro usually does have reversals. I've noticed the 1050 to 1110 a.m. macro is currently my favorite because it's after market has opened, right? You get a little bit of time, and it's before lunch, and it's a time where price is sort of settled down, and it's also sort of more clean, right? So we want a recent low to be created. Here's your recent low. Here we displace around down the low. You could see we could possibly get an entry in here. So we're in here. As you can see, candle did not respect it. I'd wait, but we do have an SMT right here. So now I want to see displacement down. After we get this displacement down, especially since it's an SMT, I want to see the first fair value gap that it taps into. Also, this would make this a protected high. All right, we have a little liquidity void here and fair value gap, so you could take it right in here and see the rejection. You could also take it off of this red candle, and then my TPs would be this low. It would also be 50% of this range, so let's draw that out real quick. Okay, discount, so possibly here. First TP would be right here though. So that would get taken. That'd be a successful trade. We also do have some PD arrays here, so I probably would not really hold anything after this because look, we have 15-minute here, we have 5-minute. It would take a lot of downward pressure to go to this discount. So probably would take all off here, or at least most. So we did end up going down all the way down to this 1 minute. Also, let's look at discount of this move. So discount's right there. All right, so we're here. Action slows down a bit. We create an SMT up here. So this would be your SMT TP. This would be your protected high at this point right here. We also do have a recently retested fair value gap that's holding. So we come down here. You could also think of this as accumulation. This could be manipulation, although it's really not that clean. I probably would not count that as manipulation. Come up here. We have a fair value gap right here that gets respected. We create an SMT. We also enter macro. Now this is a downtrend, so the macro I'd expect us to get reversed to the upside. So I would wait until this SMT is done. I would wait until this SMT is done being played with. So we take out this. We come up, back up to here, sort of. Still consolidation. So this is a consolidation macro. Nothing really happened here. We create another SMT at this low. After this, I would expect this protected high to get taken because this SMT TP is a draw on liquidity. This protected high is very close. Most likely will get taken here too. So there you go. That gets taken. Here's a 5-minute fair value gap that got respected before, so I would honestly probably respect this or expect this to get respected. If not, we have all these up here that get respected probably. So you can see this gets respected. Rebalance up to here. I don't think we tapped this again. Is this a tap? Sort of. It's right against it. Displacement down. Fair value gap. You could also look to enter in here to find a move lower if you get the entry. So here's the entry. After you see this respect, you could possibly put an entry in here to target these lows. I do expect these to probably get taken. Just like that. Beautiful. Those get taken. We also hit discount of this entire range. So here I'd just be patient, let more structure play out, maybe wait till this macro. Probably not much is going to happen here. Okay, so going into this, we're sort of in an accumulation. You could think of this right here as an uptrend, so maybe possibly expect a reversal to take out this low. Here's a recent low that's created. We also do have equal highs here, so I do want this to get taken at some point, right? But you can see after this uptrend, the macro sort of reverses it. You have this recent low right here. This would be a recent low. Gets displaced through, comes back to tap a fair value gap. You could take profits at this low right here, which would work out. Then we create another SMT at this low. And remember, we have this massive SMT right here too. So once we get displacement up, I would expect us to go even higher. I'll explain that in a minute. So we have another SMT here. And then after this SMT, we have some very interesting structure that I want to point out, like I did on the second episode. You have a liquidity sweep. And what does it do here? It sweeps internal, so out of this leg right here, out of this fractal, it sweeps internal, which is this low right here, but it leaves this external. And also remember, this is a protected low. So most likely, if we get this right here, if we sweep this, right when we start buying back up, I'd probably enter in right here. If not, we have this massive displacement up candle. This is such a good entry. Right here is an amazing entry because one, we have turtle soup here, turtle soup here, turtle soup here. We sweep internal but not external. Massive displacement up, right? That's the same pattern you always see. Internal swept but not external with massive displacement up usually is going to reverse the entire move. Or not the entire move, but it's going to reverse, it's going to do a reversal. So possible entry right here. We respect it. I'd have my stop at below this candle. This would probably be... This would be a 10-point, or there's a 10-point stop. Not bad, right? That's the average sort of stop I usually have. We come back down. We end up sweeping this low. We form an SMT right here. This could be your last possible move before going higher, right here. So this could be the very end of it. This would also be a protected low. And this would be a protected low. So now right here we go up, we take out the SPY side. Second TP, this is all low resistance liquidity. We've taken out this one. I do expect these to probably also get taken out. So I still would have runners. We take out this liquidity. We also have this retested 1 minute, so it is possible we'll respect this, maybe do a little retrace to go back higher. Just like so, we respected it, little retrace, then go back higher. We tap premium of here, and this is protected highs, obviously the target. Here's another little rebalance into this 1 minute and 5 minute. Actually go a little bit further into this 5 minute. I'd still be in the position here. And then take my final TP, which is this protected high from this SMT. Also, if you're looking at this bigger SMT, let's say we looked at a 5 minute here, you could possibly take the first 5 minute for value gap that we hit, which is this one right here. Did we tap into this? Oh, it's a 15-minute. Possible 5-minute right here that we tap into, which you can also see on with this indicator, this 5-minute, right? Possibly could go higher. We may not though, because we just took out this protected high, and we tapped a we also tapped premium of this range right here, and we sort of swept these highs. So it is possible we may not go back higher. So now we came all the way back down here, and we're into discount of this range. We also have a downtrend going into a macro, right? We should. Yeah, so right here, downtrend going into the macro. We have a sort of uptrend right here. So this would be a little tricky. But we did tap into these PD arrays respected. We have all of these bottoming wicks. I would expect this to probably make us go higher. So right here, we have displacement up, massive displacement up. Here would be your entry in this 1 minute. You could take a possible entry here. And then since this is sort of a big candle, I'd put my stop to the bottom of the body, which is the body with this. So this could be stop loss. Let's see how big of a move this is. This is way more than I would risk. Or you just put lower size for this. My TPs, I'd probably put a TP at this premium PD array right here, and maybe this high. So first TP would get hit. My stop would be at break even, and second TP would get hit right here at this high. So now, after the macro is done, we sell off here. We buy back up. We create an SMT at these highs. Massive displacement candle down. I do expect this low to get taken. There we go. We also have these PD arrays right here. So here I would just sit and watch. Even though we do have a 1 minute here, this 1 minute is way too big for me to take a trade off of. Looks like we don't even get the entry. But we did, first fair value gap that we tapped into would be this one. Even though most of the move's done, you could try to enter in this fair value gap and target this low right here. So there we go. That low is hit. And this is the end of the day here. So now price after, and you'll notice as well, see like right here, market closes at 4 p.m. If we're still in a certain trend or we're still moving in a specific direction, most likely price is going to target this draw, because you'll notice right here, right after this target gets hit, I bet we're going to consolidate. We're just going to consolidate, watch. See, just like this. We just kind of consolidating. We're doing a little bit of a move, but like it's not any big moves, right? This is just sort of smaller candles. You'll notice right after we took this out, we had just a bunch of small candles, right? And this kind of shows that we're done and that the final liquidity has been taken. We also tapped into this 1 minute as well, which is a form of liquidity. So yeah, that's that day. Let's move on to the next day. It's not letting me. Okay, great. I'll just have to let this play out. 1 second. All right, so now that we're just sort of doing this, we create this high right here. If you're looking at the daily candle, we're trading above it most of the day. We're also trading below it a little bit. Looks like it charted a bit of the overnight session. So yeah, we're trading below this mostly. It looks like here. You can also see we're in a downtrend. Macro reverses us, just like so. We have an SMT right here. First for value gap tap. We head lower, probably down to this low. This is the SMT TP out of this SMT, so we're most likely going to hit this. There we go. Alright, this is still all in the middle of the night. Another SMT TP hit. Here is the protected high. Selling off a little bit more. We create a low down here. Macro. We're consolidating. It makes this go higher. This protected high gets hit. Create another SMT here. SMT TP gets hit. Protected high up here. So this is a future liquidity target. Okay, I'm going to stop right here. So here's basically episode 4. So looking at this, we're trading below the daily open. You could see if we look at the sessions, Asia was kind of like around it, a little bit above. London was down here. We took out London low. We still have to take out London high and Asia high. So most likely we're going to head higher for the rest of the day, just by looking at that. So bullish PD arrays and stuff bullish models will be more probable than bearish models. Okay, so we just sold off. We just tapped discount of this range. I have a 1 minute fair value gap marked here. SMT right here. We create this SMT TP. We go higher. We sell off. We create another SMT at these lows, which also taps into this 1 minute. So after this, you can think of this as a sweep. You can also think of this, if you're looking at this from this leg right here to go up, this can be considered as an internal sweep with leaving external. And right after that, we have a displacement candle up. We also did create this fair value gap, or sorry, this liquidity gap. If we create a liquidity gap on a bullish move, on an up move, most likely we are going to be very, very bullish with this. So you can put an entry in right here. Put your stop at this candle low because we still have this liquidity gap that we can tap into, which we did right here. So entry would go at this fair value gap. Stop would be somewhere below this liquidity gap because the liquidity gap can get taken. But again, this low is protected until we take out this high because this is what the SMT is created on. This is also the first fair value gap after this SMT. Beautiful entry right here. Let's see what happens. So we come up and we take out this TP. Second TP would be this protected high. We take that out too. Third TP would be this protected high. And we also take that out. So this would be a beautiful move you can catch, right? Just by identifying, just by knowing the information of all of this and learning from it, you can catch a massive move like this very, very easily with very low risk, right? So going into this macro now, what do we expect? We expect it to possibly reverse. So going into this macro, two things. One, we just took out a bunch of buy-side liquidity. We took out this protected high, this high, this high. Created an SMT right here, right? Now I want to see displacement down. Again, this high is protected. We should not tap this high until this SMT TP is hit. SMT TP is hit. Do we create a fair value gap? No, we don't, but we do have an order block here, which can also be respected. So let's say you put your entry on this order block, you get filled in here. You could also see macro is starting to reverse the move clearly here. You can put your stop loss up at this high if you want, just to be comfortable. And first target I would take would be discount. Second would probably be this 1 minute. Third would probably be this protected low. So we tap into the order block right here. We sell all the way off to discount. So this first TP hit, second TP would be at this fair value gap right here. Stop would probably be moved to around break even right here. Then we have another move up. Out of this fractal right here, we tap discount just to then go lower. Right here we have equal lows created. We come down, sweep these lows. This could be a form of manipulation. Just because we tapped a discount here, we failed to move higher, like all the way up. So we had to come back down with strong candles down, also with this liquidity gap, to possibly manipulate this low right here. So this could be a standard deviation projection. You have this macro, we had a downtrend, then a little move up. This is the recent high that's created. Now that we just displaced above this, I could possibly see us retrace into 1 minute to go higher. So right here's your 1 minute retrace, and then boom, just like this, news candle at 8:30 a.m. shoots us up. You take this to 2.5. This can be first TP again. Let me draw this out. So once again, we have sweep of these lows, possible turtle soup, right? We come up, we tap into this liquidity gap, which can be an entry, just because we were in a downtrend, right? This is the first swing high that's created. We come up into here. One, you can take an entry right here. It doesn't have to be at the macro either. It can be like right before the macro. So possible entry here. You see these moves. You can also add a little bit or take a more secure entry. You could take a more secure entry right here, but your stop would be a little bit more risky with this because it'd be a little higher of a loss. But TP could be at this high. Another one could be at the 2.5 area. See what happens from here. Do we tap this 3.5? We do. Look at this. Beautifully tapped the 3.5 to the tick, and we had a little lower. But we do end up coming up and tapping it again up here. So we don't take this protected high yet. We form an SMT, right? We have a move down. Let's see if we disrespect this 1 minute. We are. 1 second. All right, so this protected high right here, this would be final TP. Unless you want this protected high to get hit, we will still probably hit it because we are creating an SMT right here, or SMT TP right here. Actually, not yet, sorry. This is the SMT TP. We do end up hitting it on ES, but not NQ. That's why we create an SMT right here. This is a protected low. This should not get taken until this gets taken. So we should expect to move up here. We come down, tap into these 1 minutes. And then we go up higher to take both of these out. Okay? What happens here? We're moving a little bit. So this would be a little bit of a tricky one. I'd probably wait for more structure, but we do have an uptrend, but we also have a downtrend going into this. So we tap this 1 minute. Do we respect it? No. But we do have a massive wake up. This is market open. Usually I don't like to mess with the, I don't ever like to mess with this macro because it's just right before market open. If it is clear, then you can kind of predict where market open is going to go, like if it to go up or down. But right here it's not clear. I would not touch this. For market open though, we do have a massive candle up, which creates an SMT. This could also be considered a form of manipulation because it's a strong candle up that manipulates all these highs right here, followed by a strong candle down. You have an SMT right here. This is SMT TP. This should not get, this high should not get taken until this low gets taken. We take the low. We also take this protected low. So right here, I am bearish. So let's see what happens. We come down here. We disrespect this 15 minute. We actually tap all the way down to this -2, 2.5. We take out this protected, and we may come down here to take out this 3.5 to 4, possibly. Yep, so there we go. We also have this buy side, or the sell side down here. But we are tapping into a macro, so let's see what happens here. We get displacement up, possibly we may possibly reverse this move or do some sort of retracement. This is also 50% of this leg right here. Get a little displacement up. Now I want to see what fair value gap we tap into. So create another fair value gap right here. We tap into it, respect it. This could be an entry. Stop loss at the bottom of this candle. This would be a Come on. It'd probably be around a 8-point move. And your target's 1. Target could be 50%. Number 2, you could target this candle right here. This green candle as an order block. So right here we do tap it beautifully. Sell off a little bit. Then we create this SMT. Displacement down after the SMT. This is protected high. This is SMT TP. This gets hit. We go lower. We create this SMT down here. So this is SMT TP. This should be protected low. We come up, take this SMT TP. Now again, just remember this. This is 10:30 a.m. So after this, right, you can see we've been trading below. I do expect price to go higher, probably most likely the rest of the day, especially because we just, from market open, we just finished this standard deviation, moved back up, right, retraced back down, rebalanced. We're moving back up again. I would expect us to possibly, before this macro, have a downtrend, reverse it with this macro, and head higher. May not happen, but it's a possible theory, but we will probably head higher the rest of the day just because of the action beforehand aligning with time and price. So create this SMT. First fair value gap that we'd hit in would be this one right here. You will get stopped out if you put your stop at this low. Take out this protected, take out this buy side. So we just took out a bunch of buy sides. Now usually after this, price is either going to slow down, run higher, or run lower, right? First candle you can usually tell. If we see this, most likely it's just going to stay consolidative, sort of. Which you can see, not much of a move, sort of consolidative. We have a downtrend right here. Could possibly expect to see a reversal, right? We have fair value gap here. You can see we're sort of going up. I'd want to see us tap into a PD ray if possible, or take a long. We just create this, disrespecting it. Now here, you have close above this high, tap into a PD ray, possibly could aim for this buy side if you wanted to. Create a high here, sort of consolidating. The macro is over now, so it's possible that this may not get hit. I'd probably be out of the trade here after this macro closes. Maybe. It depends. If I seen this get respected right here, this fair value gap get respected, most likely I would take myself out of the trade. Here we create an SMT. Here's protected low. Here's SMT TP. We get that hit. Travel a little higher. Create another SMT. This makes this a protected high. And then this is a SMT TP, which is also the protected low of this previous SMT. We head lower, take this protected out. Now we're entering a macro soon. Macro, we're in a downtrend. I do expect this to reverse to go higher at some point. Still heading lower. Take out the sell side. Still heading lower. And then here we're going to probably create some good structure, it looks like. Okay, so we create an SMT at this low. This can also be a form of manipulation just because we created one low here, but we came back up and then we decided to take it out one more time. So right here, displacement up above this high. We actually close equally with the candle close. It looks like just about equally. Create a fair value gap right in here. This can be entry. Stop at this candle low. Just because this is a really tight stop, I would not put it here. I'd probably put it at this candle low. This would be a 9-point stop. So let's see what happens now. Are we going to reverse? Coming up a little bit. Here's the standard deviation projections. Here is premium. You could take 1 TP up here at premium. We don't hit it yet. We also do have all these PD arrays, which is making it a little difficult. And then we hit it right there. Here's -2. It looks like we tap it perfectly. Okay, we're in -2. Could possibly see us retrace to 1.5 to 1. So there we do that there. You can also see right here we have a sweep of these lows, create an SMT. This becomes a protected low. This becomes SMT-TP, which does get hit. We also have this manipulation down, the strong candle down, strong 2 candles, which does happen in this little baby 1 minute. It manipulates these lows right here just to head higher. So this could also be a standard deviation projection. We hit this 2.5, came down, retraced to the 1.5 area. Massive displacement up. I possibly do want to see this 3.5 to get hit. Right there it gets hit. This 2.5, and this standard deviation also gets hit. We have an uptrend I went a little too fast. We have an uptrend going into this macro. I want to see reversal. We create an SMT up here. Here's SMT-TP. This is basically just forcing us to head lower to possibly reverse the move, because if we create this SMT-TP, or SMT right here, this is the SMT-TP. This also shows the protect high is not going to get taken, which means we're going to have to take a previous low, which means we're going to reverse the move, right? So that's exactly what happens here. Sell off, take this out. I want to see us retrace to a 1 minute here if possible. It looks like we don't. We just go all the way down to this protected low. So you can see we did reverse the move here. Let's see what happens now. So we come back up, consolidating a bit. Now right here, this would honestly be a good move to sort of tap discount. So here's 50% level. You have accumulation. Here's your manipulation taking out this high. And you could see it's strong too. It's not just little, it's not just building its way up, it's actually strongly up and then sweeps back down. Here could be an entry right here to target this 50%. So 50% is targeted. We could honestly see higher. Not enough structure yet to know though. So here we're just building more structure. We come down again right here. Accumulation. Here's your massive manipulation down. These are strong candles, so I would draw standard deviation on here. Sweep these lows, right? You can also see, if you're looking at this leg right here, this is internal low. This is external low. What do? We sweep internal low, massive displacement up just to leave the external low. That's super bullish. So I would expect a really strong bullish move. I would wait for a fair value gap entry. We have 5 minute here. Sort of not doing much. We didn't really get any entries. I would expect this 2.5 to get taken, which means all 3 of these liquidities could get taken out. These protected highs though are usually a lot more stronger to get taken out. But I do want to see us at least tap 2.5. So there we go to that now. We come back down to this 1 to 1.5. And then right here we create an SMT. So I expect this low to get taken. Low gets taken. Going a little more, it looks like we sort of take out this low. Just selling off a bit here. And then right here we have an SMT at these lows. Before that fully gets completed though, we take an SMT, we form an SMT right here. This would be SMT-TP, because that's sort of the low that's formed right after this. Actually, this would not be SMT-TP. This would be it. It's my bad. Here's SMT-TP that gets hit. We're forming an SMT at these lows, so I can't expect this SMT-TP to possibly get hit. again, right here, macro did really nothing. But yeah, right here, massive displacement up. Honestly, this is an inverse 5 minute, or is this an inverse 5 minute? I think it is. This is an inverse 5 minute. I would probably take an entry right here. So let's say I was to take an entry right here. I'd probably put my stop at this low. I'd probably do light size on here just because it's not that clean of a setup, but it does look nice. This would be a 8.25 point stop. That's not bad at all. So let's see what would happen here. I'd end up getting stopped. Probably, hold on, let me see the 5 minute. I would take it out this 5 minute. So if I was looking at this more in depth, I'd put my stop loss down at the bottom of this 5 minute. So it would actually be right here, most likely. I might still get stopped though. Okay, I guess not. So we take out this SMTTP. These highs definitely are going to probably get taken. So those highs are taken. Let's see what happens now. Again, I would expect this buy side to get taken. Yeah, right here's the end of the day though. So this buy side did not get taken, which would be pretty surprising. But again, we don't have to take it. If we take out these protected highs and sort of just start slowing down, I don't expect this high to get taken. So I'd probably take my position off. I'd take most of mine off here. But if I saw this, I would just take the rest of my position off because this high most likely won't get hit because price slowed down after taking this liquidity and not going higher to take this one. So yeah, that is really all I have for this annotations review. And the last day I'll do for these 5 episodes will be Friday. So yeah, I hope you all got a little bit out of this, and I'll see you guys in the next one.